What's up, everybody? Welcome back to another Sunday stock watch list where I give you the hottest stocks for the current week. I do this every Sunday, and Monday through Friday, I give you guys a market recap with what exactly happened, what we could have done better, and what we're looking at for the remainder of the week. And on Saturday, I upload an educational video. So, first thing I'm going to talk about is a quick recap of what really happened on Friday. So we were positive, and then we finished the day negative due to Iran seizing a British or a UK ship with 20 people on there, and people weren't sure if this was Trump's last strike before he would send a missile to Iran. So that was one of the reasons why. Well, that was mainly the main reason why the market finished red. Also, one of the Fed chairman's part of the group also came out and said he does not think we need a rate cut. So the stock market or investors in general took that as a hint that we may not get a rate cut this coming or the end of July like everybody expected. We obviously won't get a rate hike. Well, it's not obvious because these Fed people are crazy, but they wouldn't do something like that, especially with Trump, threatening their job positions. So that's two reasons why we finished negative 68 points, in case you did not know. And yeah, that's why we finished. And a quick explanation what we're looking at for this week. There's more than a quarter of the S&P 500 reports this week. Companies like Facebook, Alphabet, which is Google, Amazon, ServiceNow, Tesla. These companies are huge, and stocks like Alphabet, stocks like Facebook, stocks like Amazon altogether have a pretty heavy weight on the market in general. So if they do not perform this week, expect to have a really bad or really negative week in the market, especially with things kicking off Wednesday with Facebook, one of the biggest stocks in the game or in the market right now. So that's a few things, that's important. We got the rate hike coming, not this week, the following week after that. So we don't really need to worry about the Fed this week. They haven't said anything. They're going to be talking more the following week. So this week is strictly earnings. I'm not worried about anything but earnings. And if these big, companies report good or not. So a couple of stocks that I'm looking at for this week, right? Let's look at Facebook. Let me tell you a quick explanation and just explain why Facebook is different than Google, right? So people talk about how Facebook and Google are the same because they all deal with ads and, just that whole industry. The reason they're different is you can just look at the last quarter and set them apart. Google dropped $100 last quarter because they couldn't, they weren't performing. Facebook, on the other hand, jumped $20. So right there just shows you that just because one's doing bad doesn't mean the other one's going to do bad that quarter. So what I think is Facebook does look good for earnings. Why? I talked to my e-commerce friends. They also said that the second half for Facebook is usually their strongest just because holidays come and it just, they just perform better in the second half. The second thing is they did say that, e-com's been killing this quarter and they've been, performing, their businesses have been doing good, which is definitely solid, meaning, they're definitely performing. Prices for ads have maintained or, grown. So you can tell that Facebook as a company has done, when I talk to all my friends in the e-com business, they said Facebook's performing. Also, I looked at this quarter last year, they performed well. Another thing is the stock price is exactly where it was last time it popped on earnings. So if anything, it's discounted right now, and it looks pretty good on the chart. So right here, relative strength index, it's not oversold, but it's towards the bottom half. If you look at the MACD, it's red, but it looks like it's about to reverse. Momentum looks like it's about to reverse, and it's also sitting at pretty solid support around the 190 range, right? 195. Last time it popped was right here. Actually, it was right here. This was the day before. So it does look good. I like Facebook. It's not the same as Google. So I do like Facebook. The only worrisome about this chart is the 1 year. It looks like it crossed in the MACD, but I've looked at it previously. You can look at it over here. It has, whenever it crossed in the MACD, it's never been about earnings. So I'm not really worried. That's the only thing. If you look at the charts, you can't really tell. But if you look at the 3-hour chart, still maintaining growth. You can see the MACD still green. It looks good. It does have room to 190, so I hope this does come down. Monday is usually a continuation of Friday, but Friday wasn't that bad. So it should be just a choppy Monday, nothing crazy. So I would be buying Facebook into any dip before earnings. So if I can get it around the 190 range, that would be great. So I'm looking for the 190 range for Facebook. All right, let's look at Google's chart. Google. So if you look at the 3-hour chart, it does look like it's about to reverse to the upside, but there is resistance, right? So you can see that it's done this before where it looks like it's about to come up, and it just doesn't. So Google's at a really weird point, especially from last earnings when they dropped $100. People are, there's a lot of things that could go wrong with this earnings. Did things recover since last time? I talked to my YouTuber friends and they said that they're not getting paid as much as before, and how YouTube has gone to shit basically, and just the industry and how they used to get paid is not the same. So I don't like that when I talk to my YouTuber friends. So I'm staying away from Google, even though it looks like it's about to reverse to the upside, especially when it dropped so much last time. Also, the 4-hour chart, it just looks like a falling knife. So I don't want to touch Google here. Two big red candlesticks. Nobody's buying into recovery. Obviously, it just doesn't look good. And when I talk to the people in the industry of the YouTube community, it does not seem like it's going well. So they dropped from 1,296 all the way down to 1,154. So wow, it was more than $100. So yeah, it was pretty big. And talking to the people in the industry, you can just get a feel from it. I don't like Google. Obviously, it can reverse. I'm not saying it can't. And it does look like it's going to. So if you're going to play Google, you want to play this one lightly. Another one reporting this week is Amazon. Amazon. Let this load. All right. Looking at the 3-year chart, looks good. Just like a Facebook. Still has room around, let's see. Wow, okay, 1878. So that's around $90. So if you look at the 1-year chart, it's cross on the MACD, but it's never done that on earnings. So let's look at it. You can see that it crossed on the MACD before, and it still popped 1893 all the way to 1950. So it doesn't really mean anything when it crossed on the MACD on the 1-year chart. So let's look at the 4-hour. I like that when I'm looking to swing something. 4-hour chart does look pretty good. And you could see that there could be a double bottom here at around 1950, 1960 range. Around the 1957, 1960 range. And yeah, you could see that there might be a double bottom. MACD looks like it's about to recover. Momentum looks like it's about to reverse. RSI, Relative Strength Index, is pretty low. They also did have Prime Day, but at the same time, there probably is high expectations due to them having Prime Day. But they did say that they killed sales, and they had sales beat Cyber Monday and Black Friday combined. So definitely a positive. I would love to play Amazon, but this is just a hard one. So this could be a big one. This could push this to 2,050 this week. That's a $90 gap, especially if they come out and talk about how much subscriptions they have. Last time they announced that was last year with 100 million. So if they hit 150 this year, that would be a pretty big move. I don't think they hit 150, but if they announce some pretty big subscription list, that will definitely be a positive for Amazon. So Amazon on the better side of things, not like Google. So let's look at another one that I love. Now, it's a stock called Now. I love this stock. I'm going to be going into this. I love it. The reason I like this stock is because let's just talk about straight, facts and evidence. So Now is a cloud stock. Not one cloud stock has missed earnings this quarter, right? So let's just put that in perspective. That's a definite positive. Even a chip stock, Micron Technology, pretty big cloud stock, but it's also a chip stock, so it had something else to count on, beat earnings and was up pretty enormous number. I think it was around 10% or more. So MU killed earnings. Adobe, Microsoft even talked about how cloud should accelerate in the second half. So you look at Microsoft beating earnings, very big. So now is up. You can see the chart, very healthy, uptrend, looks amazing. Their CEO is also known for going above and beyond on earnings. So this is another one I would be buying for earnings. I'm buying this into any weakness this week. So I love now. You can see the 4-hour chart. MACD looks like it's about to reverse. It hasn't confirmed anything, but I think this earnings will do it justice. Especially it's hit a high of 303. This is a healthy pullback to 290, and it's following the trend line. So I'm liking now. They're a cloud stock, and this is a healthy space in the industry. By the way, if you look at the 3-hour chart, green on the MACD, momentum still going. RSI, you can see that it has this little pattern where overbought, down, overbought, down, overbought. And you could see that it's still doing its job. And I think that this red candlestick gives you the opportunity to buy this. So usually now moves around $20 on earnings. You can see it's done it before. So yeah, just adjust accordingly. I'll be updating you on how much they're going to move during the market recap. So make sure you join the market recaps this week. So 1-year chart looks like it's red, but if you've looked at previous history, it's turned green before right away. Even when it turned red, you could see that it's popped. So nothing in the charts seemed to alarm me, and I really do like now. So anything into weakness, I like now. I should have bought on Friday, so that was my mistake. Especially nothing happened when I ran. So another thing I'm looking at is Tesla. This is a very hard one. You can't really play Tesla. A lot of things could go wrong here. Let's see. Let's look at the 4-hour chart. 4-hour chart definitely on an uptrend. It's broke its downtrend already. You can see that I actually, if you go to my video, I said to buy the stock at $200. It fell a little bit after it to $176, but since then, straight recovery. So $57 since I said buy Tesla. So definitely uptrend. Next resistance is around 260. Yeah, right here, 262.85. So next resistance for Tesla is 262.50. We can see what it does for earnings. This thing can pop or it can drop. So nothing. I'm not a gambler, so I'm not going to be playing Tesla. I do think Elon Musk will come in clutch for. He's been working really hard, but through extreme conditions, and workers have been complaining. So, those are the earnings for this week that I'm really, really looking at. And I just think Facebook and Now are your best choices for this week instead of trying to guess. So, there are other earnings this week. You have, Whirlpool, a lot of banks, Bank of Marlin, but you have Visa. If you want to look at Visa, I like Visa as a company. They're just a strictly uptrend, but they do drop on earnings. They tend to drop on earnings. Stay away from PayPal because they like to drop on earnings. So if you're a PayPal fan, they are on an uptrend, but they tend to fall on earnings. If you look at 3-year, looks good. Look at the 1-year, red on a MACD, but does not mean anything to me. It's on an uptrend. You look at the 4-hour, it did drop on last earnings, so I do think they will pop. But MACD on the 4-hour chart had just turned red. So unless this thing, this could be I don't know. This could be a double bottom around the 178. It did hit a high of 181. But we could see Visa is a very strong company, but I'm not looking to play with Visa this week. Maybe in equities I might, but with options I'm looking at now and Facebook. You also have Snap. I think Snap's been killing it, and their business model for the second half of the year will be better than most people thought. So I do like Snap. Look at the 4-hour chart there at 14. I think Snap is setting up for a good earnings. You can see they're oversold. Last time they were oversold, pop. Last time they were oversold, pop. So I would be buying 2-week down contracts for Snap if you're playing earnings. So I do like Snap here. A lot of people have been asking me. Snap is a good one. 1-year chart doesn't look too good with the MACD red, but it does look like it's oversold. You look at the 3-year chart, still green. So I'm liking where Snap is right now. Might have a little room to drop. That's why you buy 2 weeks down, because I think it will recover. So if you're buying Snap for earnings, you want to buy 2 weeks down. So I am a fan of Snap. I do like Snap. You also have JetBlue. I like Biogen. Let me talk about a few stocks that I will be buying in equities, not contracts. So for the people that have 25K or over, or if you want to buy equities, 6% or 5% move. I'm looking at LW. I like LW, so this is a definite buy. I like LW. You can see their chart looks good. Look at the 4-hour chart. Green. So I do like LW, and I like Biogen. They also report this week, I'm pretty sure. Yeah, they do. All right, they report Tuesday, so I think it's this. All right, cool. Biogen. I like Biogen. You can see it's been consolidating, and I think this time it's to the upside. Let's look at the 3-year. Green on a MACD. I'm liking Biogen. So this is another one that I like. I'd be buying equities in Biogen and LW. So be prepared for that. Look at this big drop from 325 all the way down to 214. That's over $100. Insane. Discover also reports, but I think Visa is a better choice over Discover, just because who Visa is. You also have Boeing. Let's look at Boeing together. Boeing is a hard one. I talk to people in this industry. They actually think Boeing is going to do pretty well this earnings, which is pretty crazy because they're grounded. But they said that they usually ground at a longer term, so it just gives them time. But it usually just their penalty is usually a shorter time. So just because they're grounded till September doesn't mean they're going to be grounded till September. They can be okay in August. So pretty insane that I talked to the people in the industry. If you look at the charts, it looks like it's about to reverse on the 3-year chart. If you look at the 1-year chart, BA looks good on the green MACD. Look at the 4-hour chart, Boeing green. So I do like Boeing. Obviously, there's some sort of risk just for the whole company, just as a whole. It also broke out of that 370 range. It hit 378. So I do like Boeing. The charts look healthy. The only risk is, just regulators in general. So you got Boeing, UPS reports, Caterpillar, also Cat reports. I'm not really a fan of Cat, but people are more positive this time than ever. So I'm not a Cat fan. I would stick to the things we know. I like Facebook reports Thursday. I talked about Tesla. I would stay away from PayPal for now. ServiceNow reports, 3M reports. I would stay away. We talked about Amazon, Google, Intel reports. Let's look at Intel together. Intel 4-hour chart looks good, but they did admit that they won't catch up to AMD till 2020, so that's not a good sign. But charts look good on Intel, and it looks like it can bounce back to the 55 range, 50, old highs of 59. So this is its chance to bounce back. Charts look healthy on Intel as well. So you have Twitter reporting. McDonald's is something else I'd be buying with equities. It looks like this is a good one here. It's just been setting new highs. I like McDonald's, strong company, especially it goes with the economy of a strong economy. So McDonald's should be reporting a good quarter. You have Twitter, but I'm buying Facebook, so I'm going to stay away from Twitter. But if you look at the 4-hour chart, it doesn't look too good. Let's look at the 3-year chart. It doesn't look too good. Let's look at the 1-year chart. It doesn't look good. So stay away from Twitter. That would be it for this week. You do have Starbucks, but I'm staying away from Starbucks just because it's at all-time highs, and I don't want to get stuck in Starbucks. So that's it for this week. I hope you enjoyed. Make sure you click the like button, subscribe, and comment down below. And if you want any more information about me, make sure you check the description out. And my Instagram is Nour Trades. I'll see you guys. Peace.